The Indian markets had a very bumpy ride with global cues dominating the markets for the better part of this series. Clearly, the news coming out of China, the US Fed not hiking rates, have given signals that global demand, global recovery is still very, very weak. On the domestic side, again, I think a lot has been factored in terms of a rate cut coming through 25 bips to say the least. What happens with Bihar in October as the election outcome unfolds itself is a key pertinent factor to look at. And clearly, I think from a structural re-rating, I think the corporate earnings need to revive, which you don't see happening at least for quarter 2, quarter 3 of this year. So clearly, I think the markets are bound in the range, in our opinion, 700, 7,600 on Nifty on the lower end, 800, 8,200 on the higher end of the range. Now, probably, I think stock-specific action is something that we'll still look at. Sharp correction has been seen in good qualitative large-cap stocks. Selective mid-cap stocks are after looking decent for accumulations over the next 2 to 3 months. So the idea and the strategy would be to accumulate stocks over the next 2 to 3 months because the markets will be extremely volatile in this time period. So it also reduces the average impact cost that it may have on your holdings. So within the large cap names, private sector banks is something we continue to prefer. Clearly in terms of outperformance related to the public sector side, higher capital adequacy, better asset quality, branch network, P income, all these parameters working in favor of the large cap private sector banks, and the valuations are higher than the public sector counterparts. I think there's still stable cyclical plays that one can look at from a long-term perspective. Large cap IT is something that we continue to prefer. So Infosys, HCL, Tech Mahindra is something where we believe the earnings growth should start picking up both in dollar and rupee terms. And clearly, I think the bid margins, though they might just sustain or consolidate over the next 2 to 3 quarters, I think the return ratio should be quite stupendous for these companies because a lot of client mining activity has taken place. Pharma will remain extremely selected there. So Aurobindo Pharma is something that we continue to prefer. A large addressable generic market size, injectables around 12 to 18 injectables expected to be launched in the next 2 years. Earnings growth expected to be extremely strong. Within autos, I think Maruti is still an accumulate. Ashok Leyland still remains one of our preferred accumulate picks as a mix between the MHCV segment as well. In the mid-cap universe, I think Garwal Evolve is something we continue to like. Bajaj Electricals, Inox Wind. We think there is a huge amount of value in this company. So happy investing. I think it's going to be a volatile week, but happy investing and have a great weekend.